Hey guys, welcome to Keyword Learning, and today we're going to be talking about why I am still bullish in this absolutely terrible market. Now, as we know, the Nasdaq, the S&P 500, the Dow Jones, all of them had a very big red day. However, after many big red days, many people explain why you should buy the dip or why there's going to be a big downturn. However, I'm going to stay objective as possible and explain to you what you should do on a big red day. Now, the first thing I want to talk about is why today was such a big red day. Jerome Powell is the chair of the Federal Reserve, and many people listen to the words that he says because he's incredibly influential in the purchasing of corporate bonds and lending programs. Now, this morning, Powell came out with a statement, and I quote, "The side of the market that has been so overvalued for so long is the tech side and those bigger growth names. So we're seeing some rotation. The motley fool. However, here's the thing, seeing some pullback is actually very important, and Powell has potentially saved us from an even larger downturn." Powell also added that the housing sector has more than fully recovered from the downturn, while business investment and manufacturing production have also picked up. Aggressive policy from both the Fed and the Congress were big factors in the recovery. This is from CNBC. Now, I understand that that's a little complex. However, in more simpler terms, this essentially just means that Powell believes that the economic rebound from the pandemic has still a little bit more to go. And this is because the market has a higher upside compared to the rebound and inflation rates. And this is from the New York Times. Now, a possible counterargument to this statement that you've probably seen across the internet is that Biden and Trump have essentially given away billions of dollars, yet the dollar valuation has been the highest in 10 years. Now, what this leads to is that people use their stimulus check to invest into the stock market, obviously to make more money. However, what this does is that this indirectly inflates the stock market. So when a big red day like this occurs, they panic sell, and the stock market ends up falling dramatically because of the amount of money that has been dumped into the market because of the stimulus checks. Now, while this is true and unemployment has been incredibly high, what is important to understand is that the unemployment rate has dropped down 50% since the start of COVID. Now, we should probably be expecting 2 to 4 more weeks of big red days, but what is important to understand from this is that there is no economic indicators that has materialized in the data that has been causing this. Rather, in the long term and the medium term, investments should stay relatively the same. Now, what I want you guys to take away from this video and make you money is that buying this dip for the long term might not be a bad idea. However, what is important is you have to do your research and ensure that you're not investing too much money in just small market stocks. However, there is a very bright outlook. With vaccine rolling out and COVID cases declining, there is a huge potential bright outlook, and investing in this dip could potentially make you a lot of money. Thank you guys so much for watching. I hope you liked this video. Make sure to like and subscribe, leave a comment if you want, and peace.